to your markets news now. China and Hong Kong stocks fell on Tuesday amid souring sentiment in Asia following Wall Street's sharp declines. But losses were limited by an improving outlook around the expected impact of artificial intelligence. Asian markets slumped at close as the Nikkei dipped 0.7% to 24,110. The Hang Seng down 0.1% to 27,091, and the Shanghai Composite remained closed for a public holiday. U.S. stocks plunged on Monday as investors grappled with mounting concerns over the health of the U.S. economy. Monday's major sell-off followed a weekend interview with President Donald Trump in which he would not rule out the possibility of a U.S. recession. The Dow Jones Industrial Average fell 2%. The S&P 500 dropped 2.7%, and the Nasdaq Composite Index tumbled 4%, its worst day since 2022. Back home, the all-share index is at 0.3% at 87,605. The rand is at 18 rands 25 to the US dollar. It's at 19 rands 88 against the euro, and it's sitting at 23 rand 60 cents against the pound. A quick look at our commodities at this hour. Gold is trading at 2,912, while platinum is sitting at 971, and the price of Brent crude oil is at $69.94 per barrel. Our market commentator for today is Martin Smith from Anchor Capital. Martin, thank you so much for joining us. The U.S. saw a massive sell-off last night, fears that the U.S. economy may face a recession. What would this mean for emerging economies such as ours and for the U.S. itself?
It's a good question, because what you've actually seen is, like you mentioned, a very aggressive sell-off in the US market in the last, not just last night, but the last couple of weeks, especially the big kind of tech names. But then you see things like the JSE holding up relatively well, the Rand holding up relatively well, where in kind of previous years, you would see, if you saw the US market come off 5 or 10% or whatever it's done in the last kind of week or two or three, you would have seen the Rand at 1950 odd. So it's been quite interesting that it seems to be a little bit contained to the US for now. And you've seen markets like the Chinese market, the South African market, and also Europe actually doing quite well on a relative basis. So it's quite an interesting dynamic, and one that doesn't happen very often. But I think for now, investors are nervous about implications around, again, the US recession, but also around US valuations on the market there as well. So definitely interesting dynamic to keep an eye out for, but yeah, let's see.
Let's come back home. After a dramatic postponement of the budget last month, how is the local market anticipating the revised budget tomorrow? What do you think it will be looking out for in the speech that will appease it?
Yeah, so I think if we have to put it quite simply, I think the South African economy is not growing fast enough to cover the expenses. So you are probably looking for something in the budget speech where it speaks about trying to help the growth of the economy, but then also from an expense perspective, how do we look after expenses or try to get a little bit more out of that way? So those are kind of the things it's going to be looking for. I think the big one that was highlighted a couple of weeks ago was the VAT number. Yeah. So obviously 2% was a potentially kind of touted number, which I think was the reason for the contention. Now we think probably 0.5 to 1% is what VAT's going to be increased by. And again, it's the government playing a bit of a balancing act between expenses, income, growth, and all of those things. They're trying to kind of pull whatever levers they can to make sure that that's looked after. And I think that is one to keep an eye out for.
Yeah. Martin, let's take a look at company results today. Absa reported a 10% increase in profit, but also has flagged slow growth in its retail business. Earlier on, we spoke to the chief financial officer, who also talked about the improved operating environment that contributed to these numbers. How do you find their results?
I thought their results were quite decent, actually better than the market expected kind of across the board. Also, if you look at it relative to to FirstRand and to Nedbank, who did 10% and 8% in earnings, and Absa did 10% in earnings as well. So I think they did relatively well compared to, again, expectations and their peers. It's looking quite cheap at these levels, and I think it just depends on a SA Inc. kind of sentiment change and a play on South Africa kind of coming back in vogue again. If you see that, I think it's one that can rally quite nicely, and it's one that we are buying at these levels. So yeah, a good result. They just need sentiment to change and a little bit of pro-SA ink to come back.
Yeah. Before I let you go, here's a company we don't talk much about or often enough about. Home Choice, they posted a 31% increase in profits and also saw a 20% increase in revenue. Does this prove that their model is still a desirable one for consumers to acquire goods in an environment such as the one we are facing?
Yeah, I mean, it speaks to kind of the fintech space being one that's still attractive and still got some room to grow and some runway for them to grow into. And like you said, a very good set of numbers. It is an illiquid, smaller cap, so it's not one we look at very extensively, and the volumes are quite small in the share. But from what I had a look at this morning, I thought that the results read quite nicely, and I think it's definitely one to maybe keep an eye out for.
All right. Martin Smith from Anchor Capital, thank you so much for your time. We're going to take a quick break. When we come back, I'll have more news for you.